everyone, K Kim here. Welcome to the market update. Today's August 11, 2017, Friday. I'm recording this video during the midday. Market has been open, let's see, 19, 11, about 3 hours here. So again, my name is K Kim with the Traders Club. Today we're going to be looking at Spider, Russell, Diamond. You know what? Let's skip the Diamond. Spider, Russell, the Qs, financial sector. I wanted to look at gold, and let's go through some of these stuff right here. Let's look at biotech, treasury bond, dollar, oil, and we'll call it a day. Looking at Spider here, we've been talking about, if you remember on the last several videos, that I've been talking about this rising pivot. We've been talking about that. We lost that on, let's say, Thursday. We got below it. Wednesday trying to get back up. Today got rejected. Yesterday got rejected. And we saw that long Mariposa bearish candle here. So we lost the 20 MA setting on high. And we got back to 50 MA setting on low. So those are the levels that I'm going to be watching. As long as it stays above rising 20 MA setting on high, minor term sentiment is bullish. As long as it stays above rising 50 MA setting on low, intermediate term sentiment is bullish. So as of today, you can say the minor term sentiment is bearish as the 20 MA is starting to curl down. So for the minor term sentiment to turn bullish, you would want to see the price getting back above 20 EMA there. You can see that above 20 EMA, we tend to see some rally. Above 20 EMA, some rally. Below 20 EMA, start to see a weakness. Above 20 EMA, rally. Below 20 EMA, weakness, right? And you can see 50 MA here, 50 MA been acting as strong support since late March here. Found support there, found support here, found support there, found. You know what's funny about every time we see a decline? I just love to observe what people has to say when there's a decline, right? You can see that long red candle. We saw that another big gap up on this day, and then big red candle there, and then big red candle here, right? You can see it here, 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 here. So every time when we see a steep decline, and if that's a warning signal for the market, how many warning signals do we get in 1 year? Right? We got a big here. If we just go back here, this is a big red candle. That's a warning signal. Big red candle. That's warning signal. We got multiple warning signal here. Warning signal there. Warning signal there. Warning signal here. So since the first warning signal there, that's the big warning signal right here. So every warning signal since November actually turned into an opportunity. You see what I'm saying? But it's interesting, every time there's a big decline, there's a headline reads or somebody somewhere calling a warning signs. There's no warning sign. Look at the big picture. The market is not, it's a warning guide. So let me tell you right now, if stock goes straight up for months without pulling back, like S&P 500, that's a warning sign. But pulling back is not a warning sign. You want to see a warning sign? Warning sign definitely was. 2015, 2016 definitely was a warning sign, right? We had this huge formation, right? That definitely was a warning sign. Massive. That's a caliber that could have potentially crashed this market maybe 30 to 50%. Could have. But it never confirmed, which we talked about. Ever since they were going on an uptrend, we see these pullbacks, right? So can it go higher? With this recent pullback, I think my target was 250. It didn't quite get there with recently before pulling back. So with this pullback, I think there's a chance we can get to 253, 258, maybe a little higher, maybe 260 before the year end. But the question is, well, can it go higher? Can it really go higher from here on? I mean, we moved this much. Can it really go higher? Well, I want to talk to you something real quick here. This is actually a chart I talked about today. I actually analyzed this chart with my members just prior to this video, and I want to show you something. This was 2000. Do you guys remember 2011 correction when market corrected 25%? You guys remember that? This was when Faber I actually did a video on him. I exposed Marc Faber because he's been calling market crash every year since 2011. You can go check it on my YouTube or my blog, Marc Faber. You can just search it and it's come up. Every single year, he came up and said that it's going to crash. It's going to be worse than 2000. It's going to be worse than 2008 every year. And then the market continues higher. Anyway, so we still have 23% correction. And then what did the market do? Market finally bottomed. We got up here and we had a pretty good size pullback. Got up and pretty good size pullback. And then it sped up. Got into a next gear. And then what did it do? It starts to what? It starts to consolidate in this kind of rising channel manner, right? Can you imagine? Don't look at all this. You know, let me make it interesting here. Can you imagine people? I wanted to move it, but saying after this kind of move, it can't possibly go any higher. I mean, after from here to here, oh, that's quite a move. It can't possibly go any higher, right? Well, it did. For another, what? Year and a half or 2 years. It's very interesting to note that we have a very similar sentiment. We're in a different environment, politically and economically, but as far as the chart sentiment is concerned, it's a very, very similar sentiment. You can see that we had a correction, right? This correction right here, it took about 15 months. Or year and a half, maybe 17, 18 months. Year and a half, right? This actually correction in 2011 only took about 6-8 months. That's why we corrected about 25%. This actually only corrected about 15% because it took time to move sideways. So it kind of absorbed a lot of his, selling pressure. But what's important is that just like here, we got up, we pulled back, and pretty good size pullback here. We got up. This was a Brexit pullback, and got up, and we saw that election pullback. Right? Right there too, right? Boom, boom. And then market started to get into next gear. See right there. It sped up. And then we got into getting this tight range. So we're somewhere here. We're somewhere there. So we still got... It doesn't mean just because it happened 2014, well, it's going to happen exactly where it's going to have a run exactly a year and a half or 2 years, and then it's going to start to see another. I'm not saying that. All I'm saying is this. When you study technical analysis, what we're looking at is this. I'm not trying to because this happened, that's exactly what's. What I'm trying to get at is this. Traders and investors, they do certain things in a certain environment. Because traders and investors were human beings. It's not some computer. I mean, yeah, there's algos and everything else, but in a big picture, right? Big picture. The way we do things in a similar way, right? If we study mankind, right? And if we study all of us, every single one of us, and see if we study all of us every single day, we do things differently. Some people get up at 6 o'clock. Some people get up at 8 o'clock. Some people eat cereal. Some people eat toast, right? That we do things differently. But if we look at this, we look at our life, not on a daily basis, but look at a big picture, we do things similar way. We get up at a certain time. We go to sleep at a certain time. Weekends, we tend to eat a little bit more. We tend to enjoy ourselves. On the weekdays, we tend to try to eat a little bit more healthier, maybe exercise, and maybe read more. But on the weekends, we tend to kind of let go of ourselves. Is that true? We're also seasonal. That's why market has a seasonality. Because in the winter time, we tend to go skiing, stay in a little bit more, maybe watch movies, get a little bit more lazier. Summertime, we're more active. We go out, we picnic, play basketball or volleyball. You see what I'm saying? If we study mankind in totality long term, we do things in a very, very similar way. Market does the exact same thing. We react to certain situations. We all do in a certain way, right? That market does the exact same thing. So what I'm getting at is this. We are in a very, very similar market sentiment as to 2013 and 2014. Politically, economically, we're in a different environment, but technically, we're in a very, very similar sentiment. So this could be our gauge. Though things could change, but as long as we stay in this primary term uptrend, and people say we can't possibly go any higher. Well, how many people thought it can't possibly go any higher here and here and here? And every pullback is a warning sign. Then we shouldn't be up here. S&P 500 shouldn't be at 2,000 level, 2,400 level. Dow Jones shouldn't be at 21,000 level, right? So I believe that there's more run to come. There's going to be shenanigan here. 50 MA has been acting as support clockwork. So maybe we need a little bit of a shakeout. There's a chance they come down and fill this gap, maybe slightly meet with that 100 SMA, and then possibly going back up. That might be the possibility because 50 MA has been working just like a clockwork here, as you can see. Again, the 50 MA is setting on low. So let's see how that plays out. Currently, we're staying there. We could get up a little bit, maybe a bear flag, and then go lower, fill this gap. I think the worst case, maybe we hit that 100 SMA just hovering here, but I think this level is a level to watch. We find support any of these levels. Once the gap gets filled, you're gonna act as pretty strong support, so that's the level. Otherwise, we've been seeing a lot of these V-shaped higher move, but maybe that's what everybody's looking for. Maybe it's not gonna give you that, or maybe it's gonna just kind of mess around with people's mind, and maybe it does give you it. Nobody knows. We're trying to figure out what's gonna happen tomorrow, next day. It's gonna you wanna pull your hair out. Instead, trying to understand where we're at as a whole, right? So obviously we're still not. I mean, with this pullback, with this move, I didn't close any of my positions. I didn't get scared of this move, but I've been saying this since March. Go back and check my tape, check my videos. I've been saying this. When that happened, I didn't close any of my positions. I didn't close any of my positions. I didn't close any of my positions. In fact, I start adding. I didn't add it here, but guess what I did on the Russell 2000? I add here yesterday, right? Let's quickly talk about this. Is my IWM analysis I wrote on my blog. This channel, obviously, a lot of people know about that, but what's really interesting is that 200 SMA, right? 200 SMA acted as resistance back in 2016, plunged, got up, kind of went all around that. This all around is very, very important. It's a pivotal level. There's a lot of supply and demand, bulls and bears, sellers and buyers kind of going at it. Is it going to plunge like last time? Because last time I plunged this much, so it's a lot of scare tactic going around. People are very fearful, so there are a lot of shenanigans went up and down, but bulls prevailed. Instead of cultivating lower high and lower low, what happened was they cultivated higher lows and then got up, and then Brexit happened. How many people thought that was it? Crash is going to happen. Not understanding we have a cultivated higher high here. You see? We're in an uptrend and then call higher low. Ever since here, and then 200 SMA start rising. Ever since there, we have an uptrend. Once these indices get into the primary term uptrend, it is very, very difficult for to just crush it without some kind of a major topping pattern that could take months to build, 6 months to 8 months, 8 months to maybe 1.5 years, right? And the 200 we're finally back at it. We're finally back at it, right? Again, don't be too precise with this level. It could get you where it gets slightly below it, maybe even, slightly below this rising channel where everybody's watching the rising channel, right? So what it's going to do is going to give you a little bit of that and before getting right back up, right? So keep that in mind. You can go ahead and read all this in detail. Obviously, this also, it took 8 months since this move after the election, 8 months for Russell 2000 to reach out to the rising uptrend support. That rising uptrend support, right? You can see that we had that move, and then we pretty much, gauging is, tracking its performance since late December to today. It's actually flat. It's flat. It hasn't gone anywhere. Hasn't gone anywhere for 8 months. And that tells me there will be, I believe, about 20% run, possibly. Maybe not to, maybe about 15 to 16% run towards the end of this year, but until next by by first quarter of 2018, about 20% total since starting here. I believe that is coming here. We finally retested 200 SMA. Russell 2000 is the only index except transport. Transport did touch 200 SMA. Dow, Spider, Qs, semiconductor, they are not near 200 SMA. Russell 2000 has truly corrected through time. Truly corrected through time. Meaning now it has time. It has room to move. So what I think is going to happen is was Russell 2000. I'm not calling a bottom. It could continue lower a little bit before getting higher, but I think maybe within a month or so we may bottoming here, and once it starts to go, I believe that Russell 2000 start to lead the market, and as the other indices like Dow and the Nasdaq, I think they're gonna start to slow down and let Russell catch up, right? Now let's look at Nasdaq here. Nasdaq, had a great move, and then you can see. A lot of times when this pullback happened, we saw a pretty straight up move, and then this time it's making it a little bit difficult for the buyers here. But we're still in a higher high, higher low. We're holding the 50. We got gap down here, so maybe if there's a chance comes down, maybe fill this gap. 100 SMA residing in that vicinity. Once they hit that 100 SMA or that rising channel support, I think it's gonna in that vicinity gonna act as strong support in that vicinity. So still we're on uptrend. We don't have any topping pattern. This is gonna become a topping pattern if we do something like that. Okay, and that could take another several months, and that's a possibility on the Qs while the Russell 2000 starts to move. And what you can see is it could, last time, remember on the Nasdaq back in where it's right here. So right here you can see right there. So it went up, and then we start to see what it looks like, potential head and shoulder pattern, but this kind of consolidated, right? And then it started to move higher again. So that might be what could be happening here in that vicinity. This is a reason why I'm not going long on Qs, but I'm going long on the Russell 2000. Let's look at banks, financial sector doing it's fine. We got higher lows, higher highs. We've been coming down a little bit, but we got inverted head and shoulder here, nullified of this big head and shoulder, got up, higher lows and higher highs. I think 50 MA coming up here. I think that's the level kind of wants to touch. Gets minor term is getting a little bit hectic here as we got higher highs, but then now we're getting into this equal low area. So maybe they're gonna fizzle a little bit. Maybe we're gonna consolidate a little bit before getting back up. But trend is up. I believe the financial sector is gonna gap back up. That's how the banks move. It's gonna get up and it's gonna do some shenanigans. It's gonna get up. Like here, you can see right here, when you get an uptrend, you get up, come down, get up, come down, get up. I love the decline of get up again, some triple top, oh, shenanigan, get up, oh, some sideways. But if you look at it as a whole, it gets in a primary term uptrend. This is a reason why, I don't pay attention to some of these little minor term movements there. But looks good here, still bullish in the intermediate to minor term, bearish as of today. I wanted to look at gold, and gold is showing some positive element here. This is GLD. This is a monthly chart, guys, and I've been talking about this some time here, and you can see that we're just clearing this falling resistance. But how many times you see that where sometimes it gets slightly above it and comes right back in? What we want to see is it gets above 124.54. If we can able to get back above 124.54, gets a higher high, pulls back and retest and gets higher low, and then get up, that might be somewhere in that vicinity. It'll be a full confirmation. When I say full confirmation, I mean full confirmation of a major trend changing. I'm talking like somewhere about here. Full confirmation of potentially that happening. That's what I want to get into. Not just a little scalps here and there, right? That can possibly get into 200. So I'll keep an eye on it, but GLD does look pretty good here. Silver, same similar story here, but we're still below the major downtrend resistance though. So let's see if a silver can catch up. GDX, GDX, CDX still well below. So GLD is leading, which is usually a good sign. Usually silver and GDX can lead, but once they get it going, usually it's the silver that leads. but usually GLD is usually going to lead, and then the other ones, when it's bottoming. So GDX still below the major downtrend resistance, so I wouldn't be too quick to get into these yet. There will be plenty of time. I want to look at Nasdaq Biotech here. I don't know if you remember last time when it started breaking out, I talked about how I hate chasing a breakout. I hate it. I talked about it. I just hate it. You chase a breakout here. Look at this, what happens, right? And I talked about how I would wait until this thing got back here, and when you retest this level, maybe buying the dip would be a better strategy. I might be thinking about that. I probably play maybe BIB. I may BIB. I think BIB looks a bit more. This is 2 times biotech, and just a little bit more better to me as far as this chat. This look more symmetrical. As far as chart pattern is concerned, but they're gonna move obviously it's similar way because BIB is but obviously just 2 times of IBB. But this is where I'll be watching to go long on the pullback. And sometimes when stocks break out, they don't pull back. They usually sometimes just go. And a lot of times, if that's the case, you could try, and if you really want to get into it, I guess you could buy the breakout, maybe half position than normally do, and then when it pulls back, add more. But in general sense, man, I just hate it. I mean, look at this. You thought this was a breakout, breaking above the downtrend resistance, tanked. You thought this was a breakout, tanked. You thought this was a breakout, pulling back. So it's better. It's not good to buy the breakout. If you want to buy it, just buy the freaking dip. I think that's a better strategy, to be honest with you. Just people always say stuff like, some people say always like, well, you want to wait, you want to see evidence of a reversal, evidence of a breakout, right? What evidence? We already had this evidence here, but that evidence turned into nothing. People say usually the evidence is people are very, very short term. So they're going after just a quick couple days of move, right? And you want to see evidence of a bounce, right? They're going after just a quick move, right? That's what they're saying that. But if you're more longer term, I'm guessing you are because you're watching me here, that's not how you want to play it. So IBB looks good here, where we have 100 and 200 rising, some in this vicinity. I think good level to buy for the next target to probably fill this gap, maybe a little weakness, and then starts getting an uptrend. So Treasury bond looking good here. Higher lows, higher highs. Monthly chart looks good. You got the uptrend start to develop here, so that's a good sign here. We're getting above this neckline. That's good. Let's look at dollar, and now the oil, and I'll let you guys go. Oh, dollar. Let me look at my others. Dollar, this UP weekly chart here. We're mopping the floor here on the weekly. We've been mopping the floor quite some time, so we're at an oversold. But doesn't mean you can't go higher or lower. But let's look at monthly here. Monthly tells us that there could be more downside move. As you can see, there's a little bit more. You can see these guys there's still a lot of momentum to the downside there on the monthlies there. So going back to daily, yeah, definitely bearish. Man, it's tough to do anything here. I mean, we talked about that monthly divergence, right? We've been talking about that last time. I did an update on that thing. I mean, that's a pretty scary. Look at that. That's a strong peak to peak bearish divergence. Not only happened on Stoke, RSI, and MACD, all three, and it's coming down pretty hard. And I do not want to play with this here. But that's the pivot level here. We're probably gonna find some bounce, and then if you continue lower, maybe 23. Let's look at United States Oil Fund, USO, and then I'll let you guys go. Yeah, downtrend resistance. We did see a little bit. We still got lower high, lower low. We're still on a downtrend here. We're bouncing on the weekly chart oscillators, but a lot of pressure to the downside. 100 SMA falling. You got the death cross there. If you want to see USO bottom, I mean, you want to see a major bottoming, this needs to get well above 1245. That's a major gap down right there. That's a major, and that gap is so strong because it retested this prior gap and it tanked. So, see that? So that makes this gap very, very strong gap right here. You want to see a major reversal. You want to invest in USO for long term. This thing needs to get above 1245. Have a wonderful weekend. Good luck trading next week.